Welcome to another inspiring episode of the Elite Expert Insider Podcast. Hosts Melanie Johnson and Jen Foster are the owners of Elite Online Publishing. They're both Wall Street Journal, USA Today best-selling authors. We're really glad you're here because this podcast was designed for you. Meet industry experts that share their secrets and strategies. Get successful results for your business in money, relationships, health, and your life. Each episode is going to inspire you to take action towards reaching your greatness.
Hey everyone, it's Melanie Johnson here with another great podcast for you. Jen Foster is out on vacation this week. Lucky her. All right. We're coming up to the new year. No matter what time of the year it is, it's always good to know about financial freedom. How do you get financial freedom? We're going to learn about the Palm lifestyle today. I have a friend of mine who's become a great friend of mine recently, DJ, the money coach. He is amazing. He is a partner with Chase. He speaks all over the place. He has inspired and motivated people about money and educated them and taught them how to have financial freedom. And I want that for everyone who listens here. I want it for all of my friends, all of my family. I just think it's such a big hole in the marketplace, especially with young people. They never get taught this. DJ, thank you so much for being on our show today. You're just everywhere. And I just can't tell you how much I appreciate you being here. Your credibility is off the charts with everyone that you've taught and continue to teach. And plus you're from Detroit, or you love Detroit. You've got a lot of real estate holdings there. And that's my hometown. Welcome.
Well, Melanie, thank you. And it's a privilege and honor to be on your amazing platform. And yeah, we're just excited to help people out. And a lot of times right now we're in a recession and a lot of times people are in a panic. The first thing we want to do is tell people, hey, pump the brakes. And as long as you have your health, everything else can be overcome. That's the first message that we want to get out to the audience.
That's so true. That kind of makes everyone breathe. Take a deep breath. It's not going to be the end of the world, no matter what, because we've got you here too to guide us. So tell us, how did you get started in the financial industry and your journey to where you are now?
That's a great question. About 25 years ago, Melanie, I had went to school to become a CPA and finished out with a minor in accounting and ended up having a major in television production and broadcast journalism. We have a lot of things in common. So after I had worked in industry for about 4 or 5 years, making good professional income, I went to go buy my first house, had money in the bank, and went to the bank, and I actually got turned down for my first mortgage. And I was baffled at it, but I said, okay, no big deal. I just brushed it off. I kept working. Then I built a business about 5 years later, and the business was going very well. And then I went back to the same bank to get a business loan, and I got turned down. That one was devastating because at that point, I thought I was doing everything you taught to live an American dream, but now I'm getting turned down for a bank loan for a business that's going to create legacy for me and my family. So I took a step back and I was like, I just asked the officer, I said, hey, what is it? I know I got 6 figures in this bank. I know I got $1 million that I signed contracts with it. Why can't you give me a business loan? And the guy just said, hey, be all honest with you. He said, you got bad credit. I said, I got bad credit. He said, yeah. He said, your personal credit is bad and you don't have really any business credit. So it's just amazing you put something together. So I said, okay. So he told me, he said, I had a 525 credit score and I had $60,000 worth of personal debt. And what I realized is that even though I went to school to get an accounting degree, I knew how to do business. I knew general ledgers, P&Ls, all that stuff. I knew business finance, but I had no clue about personal finance. And at that point, Susie Orman was one of the biggest financial educators in the late 90s, early 2000s. And I used to always watch her PBS shows. So she had this big book, like an encyclopedia called The Road to Wealth. So I just read the chapter on personal finance. And this is in the analog days, Melanie. So people don't think that you can just click on Google and get these answers I'm telling you about. So I actually had to go to the library. I got the book. I read the chapter, figured out how personal finance worked. I did not file bankruptcy. I want to let your audience know because it's usually people get themselves in trouble. Nobody forces them to make bad habits and they take the excuse and dump it on society. So I actually owned up to my debt because when I was in college, I was just signing my name on every credit card to get the free stuff to be able to pay for college and just live a little bit comfortable in my college life. So I read that book, 525 credit score, and in 12 months, I raised my credit score to 700. In 24 months, I raised my credit score to 800. And within 5 years, I eliminated all the debt. I paid it all back. Not filed 1 penny of bankruptcy, didn't take any consolidations. I just followed the rules in the book, overcame that. And next thing I know, I said, wait a minute, if I'm having this challenge, it's got to be other people just like me in the middle class having the same challenge. Because here's what I realized: having a formal degree, I was not going to go work with the Walmart services in the financial area because they didn't know as much as I knew. I wanted to work with UBS. I wanted to work with Goldman Sachs. I wanted to work with Merrill Lynch. I did not have $2 million liquid, and I didn't have a $2 million net worth, and I wasn't a credit investor. So that went out the door. Right there, a niche was created where I realized if I could create a middle class version of a family office for wealthy people, I would be onto something. So I created the 7 Spheres of Money program back in 2002. And in the process, Melanie, my mom in the late 90s, she was a victim of identity theft and predatory lending. I helped her get out of those situations. And then I started teaching a program called Family Finance 101 in my church. There's a program called Focus on the Family, Dr. Dobson. So he came to our church, not him personally, but his organization came to our church like in the early 90s, and he had a 8-week program and nobody could finish it. Only about a third of our church finished it. And I said to myself, what if I can condense what he's doing down to 3 hours? And I basically got some consultants, put some ideas together, and I put a program called Faith, Love, and Money, started teaching in the churches. It started getting a really good reception because people started getting out of consumer debt. Then I started showing them how to buy houses and stuff like that. And then over the course of 20 years, I've sat down with over 35,000 people from churches, YMCAs, Federal Reserve, State of Illinois, Attorney General's office, State of Michigan, representative office, and taught them finances. And
so let's get into some of that teaching. What are, you talk about different rules. What are some of the rules, like rules of money that people should know? Like you're teaching maybe a 20-year-old or even a 40-year-old who has no idea what's going on. What are some of those basic rules that we should be doing? Like you were just, your credit score. Man, I've never even checked my credit score. They might not even know they had a credit score.
So one of the first things is you got to teach them about a budget. As dumb as that sounds, you'd be surprised. I've sat down with people to make a couple of $1 million a year and they don't even have a budget. And then they turn around and they be in trouble because they have high income earners. They're not financially literate. So the first thing is we should teach them about a budget, okay? The second thing is we should teach them about the biggest thing that actually gets them in trouble with finances on interest is the rule of 72, how compound interest actually works. And a lot of people hear about the rule of 72, but they don't realize how devastating it can be for them, but they also realize how magical it can be for them in their advantage. So we teach them about the rule of 72. Basically, I know most of your people say, I already know that, DJ, but I just want to reiterate.
We're going to say, what is rule of 72? Right. Tell us what rule of 72 is for people who don't know that.
First thing I do, Melanie, I say, if you heard it, but you're not applying it, it's worse for you even know about it. So here's what the rule of 72 is. You take the rule, take 72, the amount of interest that you're earning, or most importantly, the amount of interest that you're paying, you take that number. Let's say it's 12. You divide 12 into 72, you get 6. That means that your interest will double against you every 6 years if you're paying the minimum payment. And a lot of times on credit cards, like I was doing, I was paying a minimum payment. I didn't have late payments. I was paying a minimum, and then my debt utilization got overextended. Now, when you look on the positive side, every 6 years that you have 12% interest in 72, your money's going to double for you every 6 years. So you can literally teach a young child right now at age 13 about that and put $21 a month, Melanie, into a interest-bearing account that makes 12%. They will be a millionaire by the time they're 25. You couldn't stop it based on the rule of 72. So that's
where you can find 12%. That would be a miracle. Anywhere you should get 1%. Some places. Where's 12%?
That's a great question. I'll touch on that a little bit later. But there's places to find 12%. You and I both know it's just a sophisticated access to the mechanism. A budget, rule of 72. Then how do you buy a mortgage the right way? Okay. So I'm going to teach your people about what's called the 50-25 rule. And I used to be a minority owner of a mortgage company in Detroit, right outside of Southfield, Michigan. So here's the rule 50-25, and most mortgage people who do mortgages have no clue what this is. So the average person, Melanie, buys a home and they get a 30-year mortgage, right? And most mortgages are 98% interest front load. So that means when you make a $100 payment, if that's your principal, 98% of that for the first 10 years is all interest, okay? So at the midway point on a 30-year loan, that's 50% time in debt. And if you put down the basic 20% down, or like most people put 5 to 10% down, you may, on your best case scenario, have 25% equity because all of the interest you're paying back to the bank. Thus, that's called the 50-25 rule. So when you get to a situation that we had before the pandemic, interest rates were like 5 to 3.75%. And then when the pandemic came and they lowered it to free money, when the Federal Reserve gave the retail bank 0, and then they lowered down to 2%, here's what happens when rule 50-25 works against you. You had a house, let's say you bought it in 2012. You had a 3.75 interest rate, but you now had it for 10 years. And now the interest rate drops to 2%, and you say, it's time to refinance. We're excited because the banker says, hey, Melanie, you got a $1,000 payment. I can get you a $700 payment, put you in a 2% interest. You're excited because all you hear is $700 payment, $300 I saved. Here's what happens. They put you right back into a 30-year mortgage, and now you pay 5 times for that house. But if you knew the 50-25 rule, what you would have done is said, hey, put me in a 15, give me the 2% interest, and pay the house off in 7 years. That one move can make you legendary wealthy for the rest of your life.
And you can even do it. Do you believe in doing principal payments? Like adding, if you have a 30-year mortgage, just give another principal payment.
Absolutely. So what we do in the class is I actually teach you how to do that one payment at the beginning of your purchase of your mortgage. If you put one payment, that knocks off 3 years. Then if you add a bi-monthly payment over the 25 years, it'll knock off 12 years. And the amortization calculators show you that just like that. Those 3 simple moves on a 30-year mortgage, you can pay off your house in 7 years. Now, if you're really sophisticated like you and I are, we can use a home equity line of credit, which basically becomes unsecured debt, and you can actually pay the home off in 5 to 7 years. I teach that all in our class. And that's why Chase loves us. That's why the YMCAs love us. That's why the Federal Reserve loves us. And I've been doing this for 20 years. And again, I've sat down with over 35,000 people personally, and I've spoken on stages in front of over 150,000 people in 20 years.
It's amazing. Now I know there's 2 more principles. What are the other 2 principles?
Okay, so here is the principle that's most important if you want to be recession-free and have lives like we do, which is nothing special. We just figure something out. I call it Wi-Fi. WHYFI, Y financial independence. So here's how it works, Melanie. I look at my reoccurring expenses, utilities, gas, taxes, and stuff like that. Now, let's say again, it's $1,000. If I want to get free and never have to work for anybody, I have to get passive income to equivalent of $1,000. That's security. You're not free yet, but then you work your way up to 2,000. And anytime you get 2x of your reoccurring expenses and passive income, no matter if the pandemic or anything happens, you are free for the rest of your life on this planet. And how I teach that is, just like you, I created a program called Got Assets, 3 Steps to Success. And I show this old pamphlet for a reason, for reference points. You can see the dates on this, 2008. So what I do is teach regular people how to start a business, take the top dollar, buy real estate, invest in other businesses, and leverage the tax laws. And there's 2 tax codes that most people don't know about. One is called Cafe Rule 125. And if you work for a corporation and they pay your health benefits, your dental benefits, they give you 401k, they get that written off on the Cafe Rule 125. And this applies specifically to when you get college reimbursement at your job. I got college reimbursement one time. And here's the trick. Most time at the job, they say, if you don't get an A, we don't cover 100% reimbursement. If you get a B, we pay 80%. If you get a C or less, we pay nothing. But Cafe Rule 125, which is an IRS code, says all you have to do, Melanie, is pass the class. And it's 100% write-off.
Wow. So they're getting written off no matter what.
Exactly. So the company is making money off of you if you don't make a B or an A.
That's right.
Imagine that. So what we have done is we taught people how to play cash flow and make themselves recession proof. Because right now you can have a $10 million net worth, but that's just numbers on the paper. What is the cash flow is coming in your house? I teach people how to earn $8,333 a month in passive income, starting out to start with a landscape business. You can start with a plumbing business. You can start with a handyman business. And you can start taking that top dollar. And then as a small business owner, here's the mistake I made. I created a cleaning company in 1996. Again, you're going to love these old archaic references that I showed you, right? So I just show you, I've been doing this for a while, right?
Yeah.
So I started this cleaning company, accounting background. I used to be a president of a North Shore accounting practice called Marion Schoenfeld. They have $1 billion worth of assets right now. And why am I saying this, Melanie, is that because when I started my cleaning business and it hit 7 figures, that was the company that I got turned down for my business loan. In the process, here's what happens when we start our first businesses. Why do you get in business? To retire, right? Guess what I did not do in 5 years? I didn't have my own retirement plan. So the first thing I'm going to teach you and your people is open up a self-employment pension plan, a 401k solo plan. Open up, if you have 50 or more employees, a KEO plan, and you can put pre-tax dollars in that, Melanie, up to right now, a 401k solo, $22,500 for 2023. A SEP, $64,000 to $124,000. In 5 years, I sat down with my CPA and my financial planner, and they said, you left $500,000 on the table. And at this time, this was like 99. They said, if you were getting a 7% return, DJ, by the time you're 55, that would be worth 2.5 million. So that's when you get into business, because I know most of your people are business owners or aspiring business owners. That's the number one mistake. They said the cobbler who makes shoes has the worst shoes. And when I owned the cleaning business, I was so busy, Melanie, my house never was clean because we were out cleaning everything in downtown Chicago, and we were getting jobs 24/7. And while it was hot, we had to get every job we can get. So that's what we teach them inside the class. And then we teach them one-on-one. First budget, first understand the rule of 72. Now understand from a mortgage standpoint, 50-25, because most Americans, their biggest asset to wealth is their home. Then if they're fortunate like you and I, they get a small business. Now they have a chance of multi-generational wealth. But if they don't know these terms, they're going to work against them. And unfortunately, they're a professional 9 out of 10 times. I hate to say this, they're selling you a product that makes their company the top profit. And I'll give you an example in insurance. Here's the next thing they need to know. Here's a secret. When you buy insurance, it's usually sold to you about, you know what, Melanie, how much can you afford and what's the payment? But let me ask you this. When you go to the gas station, what's the unit of measurement that you purchase gas by?
The gallon.
A gallon. When you go get bread, what is the unit of measurement that you buy your bread by?
Just buy a loaf, right?
Yep, a loaf, 16 ounces. So it's a unit. Guess what? Insurance is bought by something called cost per thousand. Per thousand. So when everything's equal, Melanie, when your age, your credit, and your health is rated. If you're a premium, then next thing is cost per thousand. So if you can pull up a calculator, I'm gonna show this to your people. It's a real quick trick. You take a $500,000 policy, right? You divide that by 1,000, that gives you 500 units. Now let's say I'm paying $30 a month for my life insurance. So I would take 30 times 12 months is 360, and you divide 500 into that, that gives you the cost per thousand. So the next time you sit down with your insurance agent, ask them when everything's equal, hey, Bill, hey, Jane, what's my cost per thousand? And now you can get the playing field leveraged in your favor. And this is what I share with your people. I'm on my 5th decade on the planet. I have 2 $500,000 policies that I literally pay $30 a month for. And the average 20-year-old can't get that because they don't know the cost per thousand and how it is purchased. So I actually break these things down because I'm a licensed professional as well. Those are the key components to what every middle-class family needs to know, and 9 out of 10 of them never know.
No, they never know. And then these are just such simple things, right? So simple things, not huge to do, easy to do. Having a budget is just taking that 5-10 minutes and saying, what are all my expenses? What do I want to be spending money? And doing that rule of 72. So many people don't even know what that is. And to prepay your mortgage. And I was showing my kids, we just bought an investment house and we mortgaged part of it. And I said, I just want to show you the payment's $2,600. I said, the interest on it's almost 2,000.
Exactly.
They're like, what?
Front loaded.
And so it almost boggles my mind, like why you refinance, because then you're putting yourself back in that interest bucket again, you know, that you're paying all that extra money. They were floored. They couldn't believe it. They had no idea. And I don't think most people have that idea.
No, because again, most people are sold stuff on payments. And let me tell you what's going to happen. We go back to the Great Recession, 2008. So here's a learning lesson that now we can see that video and understand what's going to happen over the next 24, 36 months here. So when interest rates were low, people were extending what they could buy on credit. The average household income right now in America is like $60,000. That's working class, middle class. But professional middle class is about $125,000. So that $125,000 family, they normally could afford a $300,000 house because the payment on that at 3.75 it's like $1,200.
Yeah.
But when interest rates dropped to 2%, that family went out and bought a $500,000 to a $600,000 house. And when they bought that house, they didn't realize that when it's assessed by the county assessor, the taxes go up, right?
Mm-hmm.
And then their maintenance fees are about 30%. So now that person, the interest rates are rising up, they're getting tight because they didn't have enough emergency fund. They only put down 10%.
Yeah.
So now what's going to happen is now the prices are going to come down, interest rates go up, those people are going to get tight, and about a third of the people are going to lose their homes. But here's the reality for the investors. The investors who have cash and credit will buy stuff pennies on the dollar. You know what the saying is? When there's blood on the streets, buy as much real estate that you can get.
Yeah. I want to ask you a little bit about real estate investment. So if you have rental properties, like we talked about paying mortgages off and doing this stuff, what is the strategy if you have a rental property and you have a loan on it? Should you be paying extra money to the mortgage? Should you decide how long you're going to keep the property first, or what if you don't know? And should you be getting a line of credit? Should you be paying cash for it and getting a line of credit? What are the strategies? Because you have a bunch of rental properties.
Yeah,
What's
so
the finance strategy for rentals?
first thing is I want to determine, do I want to be free? So for me personally, yes, me and my partner Clarence, we started investing in Detroit back in 2006. And we have collectively 350 properties that we own, manage, and operate outright, own them cash. Mm-hmm. So the first thing I realized is that I do want to carry debt and get cash flow, but for me, I wanted to be totally free. So I would try to pay off first if I wanted to get free sooner than later. You see, a lot of people, they just want the money. I want absolute freedom first. Okay. So when I look at those scenarios, if my reoccurring expenses, when I got free at 38, it was $6,000 a month. At that $6,000 a month, when I got to 10,000, I was free because I paid off all the properties that I own. Most people, they want to continue to leverage that, get business credit too fast. And I'll give you a cautionary tale. And this is the reason why I always bring this one up. So now this is one of my other best friends. He's actually a CPA. He did commercial real estate when we did this program. He ended up having about $4 million worth of commercial debt when the market crashed in 2008. And he had to go back to work. And to his credit, he didn't file bankruptcy. He paid it all off 7 years later. But because he was using credit too much, we decided to take the slow route, pay the properties off, and cash flow them up. Now, depending on who you are and what your strategy is, or your capacity to carry debt without taking the stress, I would sit down with you first and foremost, assess you, and see which road is best. When is the best time to just pay it off? When is the best time to use credit and get massive business credit lines, which we can show you how to do that interest-free for 18 months up to $250,000. So it depends on the individual. So it's kind of like, Melanie, when you go see a doctor, you make a call on telehealth, you say you got a stomach pain, instead of them just say, take a Tylenol, they say, we got to come in, check your abdomen, stuff like that. That's the first thing we do as professionals. We never give specific advice. So you have 5 different asset categories that you are part of. You and I are more like sophisticated investors, but for the novice who may have came into $1 million, I want to sit him or her down, assess, do you have an emergency fund? Let's get that packed up. Then let's make sure that retirement fund is started. Now let's look at, does it make sense to pay the house off, carry debt, increase the cash flow? And whichever bucket that we choose, we're going to take a 2 to 5 road net. But I'm going to always tell them at some point in time, Melanie, it will be in your best interest to have it totally paid off, because here's the beauty of it. In a recession, you can always get a loan on a property, and you can get a 10% loan, a 20% loan without no credit. Because here's the secret. The bank always gives people who own stuff outright credit.
So true. These were amazing tips. You gave tons of value today. DJ has a book. He is speaking. Tell us where they can connect with you. DJ, the Money Coach.
Yeah, actually, we put a little special package together for your people, Melanie. And I think that my manager gave you a little link that'll show you. And if you can have time to, it's like a 60-second spot. So we're going to give your group an opportunity to do a master class with us. We're going to give them a whole class that you taught in for us. We're going to do a master class. We're going to teach them how to acquire real estate. We're going to teach them how to buy multi-units. We're going to teach them how to pay off their home in 7 to 10 years. And we're going to teach them how to get an 800 credit score in a 2-hour session that normally is over $900. We're going to give it to them for less than $100 and 2 consultations, one with you and one with me. And all they got to do is hit the link that we gave you. They can catch me at DJ the Money Coach on Instagram and on YouTube. and djthemoneycoach.com. But we're going to do this exclusively for your organization. And that's going to be on the what's that? Not next Wednesday, which is the 14th, but the 21st of the 28th. We're going to provide that for your organization exclusively. And that will be our gift to your organization because it's our 20th year anniversary and it's my birthday in about 12 days. So we want to be in a happy mood and give everybody the pom-pom lifestyle. It's like you said, it's plenty of money and peace of mind. And we want them to come travel the world with us on the Beach of the World Club.
Sounds awesome. We're going to have that in the notes, show notes. So everybody click that link and join us. And if you miss it, I don't know, DJ might, if he's really in a happy mood, may provide it for you later on to catch the recording, but get there live. So thanks, DJ, for coming. This was awesome. And remember, if you're thinking about writing a book and publishing a book and you want to become a bestseller, we guarantee all our authors will become #1. We only work with a selective group of authors, but hit that author submission button on our website and have a great week, everyone. See ya. Hey, are you looking to increase your revenue, build credibility, and elevate your brand? This podcast is brought to you by Elite Online Publishing, an innovative publishing and full spectrum marketing company. They will publish and market your book to make it a #1 bestseller. Becoming an author is the best way to market your business. So contact them at eliteonlinepublishing.com today. All of their authors become #1 bestsellers.